Happy Tuesday, y'all. Hope you had a wonderful Labor Day weekend. Welcome to another episode of The Week Ahead, where we're going to discuss the top 3 things that are going to move the markets this week. My name is Kevin Weedmark, aka The Mortgage Mouth. I really appreciate you listening in. Please don't hesitate and don't forget to hit that subscription button. Every day I come to you with a quick 2 minutes of the daily dose as well, giving you an update of what happened in the marketplace and how it moved interest rates. But let's just dive right in with the top 3 things. And what we're looking at this week is we're basically looking at the big show. We got unemployment, we got non-farm payrolls, and we have earnings this week. That is coming out on Friday. We also have the current temp. We're going to be talking about services, PMI, and manufacturing prices. And then the big thing, stay out of the kitchen. Will the courts just leave the administration alone as it pertains to tariffs? All right, so let's just dive right in. Obviously, the big news that's going to be coming out on Friday, and everybody's anticipating it, is obviously the non-farm payroll number. If you recall, last month at the beginning of the month, we saw a huge drop in interest rates, all caused by a horrible non-farm payroll number. It came in at 73,000. Now they only have it today. Looking at, if I pull this up, you can see at bottom right, they're indicating maybe a 74,000 number. That is horrible for how many jobs that can be added to the U.S. economy. That would be horrific. And obviously we had those big corrections. Those were the big drivers where we saw 250,000 jobs increase. We saw that change. That was horrible. So let's hope that does not come in the same. Also, we're going to be looking at the unemployment rate. It inched up to 4.3. And obviously we have earnings. If earnings are increasing drastically, that's going to be inflationary. So the big mover this week is going to be Friday. And my prediction is the following. We are going to beat that number. We are going to come in around 100 to 125,000 25,000 jobs. I think the revisions are going to come in right where they expected. They might come in maybe a little bit higher. We're going to see earnings hopefully pull back because, again, that could be an inflationary number. And as we already know, inflation is the Fed's number one concern. However, this number is so significant because of last month. And if it clearly indicates that the labor market is pulling back and that jobs are pulling back, you can bet that there's going to be more pressure for that Fed to cut interest rates further as we head into October and December of this year. And then obviously we have just the non-farm payroll number. So my prediction overall is I think we're going to beat the lousy number that they have forecasted. I mean, who sets the forecast numbers? I have no idea, but that number ain't shit. So I expect us to beat that even with the government layoffs that we have. I expect earnings to hopefully remain steady. Again, inflation to me is the big monster that's out there. So let's hope that holds steady. And then we have the unemployment rate, I think will creep down to 4.2. So overall, it could be a good number for us. And I think what's going to happen is it's going to come in a little bit over, and you're going to see more political pressure from traders, from people to get that Fed to start talking about October and December rate cuts. Because to me, the September rate cut is already baked in. I really don't think that this number has a significant impact on that. I think CPI next week would be a bigger driver. I think this week it's going to be more about the future rate cut. So it's going to lay out the trajectory for Q4. Brings me to my second thing this week that we should be looking at. We got services PMI. And we also have manufacturing prices. And why these are significant numbers is because although it's not your big numbers, so it's not your non-farm payroll number, it's not your CPI, it's not your PCE, it's not those big numbers that we get, those data sets. But what it is it's purchasing managers giving us a very inside look of what the pulse is right now. So, for instance, we have the manufacturing number, and you can see it looks like they already came out for this morning. We have manufacturing PMI come in lighter than anticipated. It read below 50 means that it's retracting. And then we have manufacturing prices actually pull back a little bit as well. The manufacturing PMI came in a little bit less than forecast as well, which means the economy is slowing. And why those numbers really are good, they're all pointing to something that's positive for us, is because from an interest rate perspective, that is anyway, is because we have that's pulling back. So we have a labor market that from a manufacturing side and from a purchasing manager's standpoint, they're saying, hey, those orders are pulling back. And then you have the services side and you have the pricing side, and they're saying that's pulling back as well. So you have we have two indicators today of a non-inflationary number although it came in right at forecast, so it's not going to be a big market mover. And then you also had manufacturing pulling back a little bit, further indication that the economy might be slowing, although neither of them were earth-shattering. So they're not going to move the markets that much. But it just is one of those things that in the back of traders' minds is going to build on that non-farm payroll number from Friday, is going to be further digesting for PCE last week. And it's going to be also going to set the temp for CPI on Tuesday next week, which brings me to my last point. And what I think is one of the things that just kind of came out of nowhere was obviously last week we had once again the court system interjecting in tariffs. So now what you're seeing today is you're already seeing it. You're seeing the market pull back, and I'm talking about the Dow and everything like that. That's pulling back, and you're seeing Treasury sell off. If I look at the Treasury market right now today, you see it already up. We're going to be spiking off our lows. We're not going to hang on to those. Interest rates are going to increase slightly today, and the reason being is because it creates uncertainty. Once again, we have our court system getting involved in the tariff business, indicating that it's unconstitutional what this administration is doing. And what the fear now is, if you're from a trader standpoint, is okay, well, what does that mean? If we go back to where we were, does it mean future inflation because we were riding high inflation? It seemed like the tariffs weren't really stepping into the inflation concerns so far to date, although ever so slightly. And now the big thing is the U.S. government going to have to pay back all that tariff revenue that it's been receiving that is going to be pushing down the federal deficit, which means that future inflation could be a major concern as it pertains to the federal deficit, creating more angst, creating more uncertainty. And if that should happen, what does that actually mean for these businesses? Is investing into the Dow, into the NASDAQ, investing directly into companies, what is it going to mean for their earnings? Are they going to go up? Are they going to go down? At the end of the day, this needs to get to the Supreme Court. There needs to be a judgment made by the Supreme Court so we can turn the page and move on, so that we as an economy can make that decision that we're doing these trade deals that are going to benefit us as a country. We're changing our federal deficit with a lot of countries out there, getting it right, so to speak, as this administration would allude to. And what it's doing is it's creating a huge revenue base that is going to be used by the federal government to pay down federal debt, which is helping with inflation. So once again, I just wish that these courts would stay out of the kitchen, do what they're supposed to do. We get all these lawsuits, and it looks like the overall, if you look at it from April when the announcement came back to now, it looks like the tariffs are doing a good thing. They're adding to the ability to the U.S. government. They're collecting a huge revenue from those tariffs. They don't seem to be really affecting inflation, and it seems to be righting the ship for U.S. investment. It seems to be righting the ship for U.S. businesses, putting the U.S. back on good trading scale so that we're not seeing a deficit with all these other countries, and we're getting a trade deal in place that's inked in stone. And it's going to be a benefit for both parties. So once again, it's a shame because I think it's going to take a while to get to the federal government. And now it's going to take significant data to offset the uncertainty that this is once again created. So now I predict interest rates are going to remain a little bit on the higher side this week, unless we get some huge indication on Friday of non-farm payrolls missing their number, as well as a pullback for any corrections from the previous month that we've had. That will be the big driver. And what it's going to do is it's creating uncertainty. So even with this data and even the pressure now that could mount for future Fed fund rate cuts, it gives them ammunition to sit on the sidelines and say, well, we're not really sure what's going to happen. Why would we really do anything if we seem to be moving slow and steady? So you're going to see, in my opinion, that change as well. So, hey, to me, that's the biggest news. But from a data set standpoint, we got those other things. So the three things, once again, and just a recap: Friday, big day, non-farm payrolls, unemployment, earnings. We got services PMI, as well as we have manufacturing prices. We've already seen that data today. It looks like a retraction in both, which is a good thing. And let's hope this court system, this appeal plays out a little bit. They gave them till October, but let's hope they can push and get it in front of the Supreme Court so we just get a decision, moves ourselves out of this uncertainty, and we move down the path of recovery. All right, y'all. Once again, my name is Kevin Weedmark, aka the Mortgage Mouth. I am a nationwide mortgage consultant here to help you with your strategy, or for you great ways to get lower costs and secure the best interest rate possible for your given situation. And if you're an agent out there, would love an opportunity to serve your clients. And lastly, please don't hesitate to hit that subscription button so you never miss a beat. And I'll be coming to you later today with another episode of the Daily Dose. All right, y'all, have a blessed week. Enjoy it. And I'll be coming to you later today.